Hello and welcome to our 11th COVID-19 market update with Thomas Caldwell. Today is September 2nd, 2020, and it's been about 24 weeks, if you can believe it, since we began self-isolating and social distancing. Tom, I want to talk about purchase power.
Right.
So many people have been self-isolating, so they've stopped purchasing suits, dresses, deodorant even, because they are working from home. Lipstick sales have gone down because of masks, and ice cream sales have gone up because of comfort food. How do you see this impacting the economy?
Well, I can't speak to the lipstick thing, but I can confirm the ice cream matter that my suits are getting a little bit tight on me as well. We're having changes in buying patterns, living patterns. Some of it will revert back to what was, some of it will not. For example, what's going to happen with travel? Are we going to be more domestic in our travel? Are you going to stay away from the airlines for a while? What's that going to mean for airplane manufacturers like Boeing, et cetera? So there's a lot of changes in patterns that are going to occur. Less people coming downtown, less traffic. And I think most of us are trying to get a handle on what it's going to look like. Futurists usually get it wrong. But I do think that we're going to be more economical. I think companies are going to be more efficient. There will be positives to come out of this, that we're going to say, what do I really need that thing? And as an economy, as people, we needed to start saving more. And that's exactly what's happening right now.
So this wouldn't be a market update without you talking about the markets.
Well, it's interesting, it's almost as if the market is, for me, a living thing. And it has moods. For example, after March, the market just exploded on the upside. And we'd worked on that basis, and we made big investments at that period of time. And that was the relief that we're going to at least survive, that not everyone's going to die, that there might be a solution. So the market breathed this long sigh. Then that was reinforced as we got into the summer with earnings reports that beat expectations. But we still had the momentum, the headwinds of what happened pre-COVID. If I had to say right now, the market's sort of pausing a little bit to just take a relief breath, but also to say, wait a minute here, this may take a little bit longer than many of us, including myself, had predicted earlier on. It might be a while before we get back to whatever normal looks like. So the market's being a little bit more cautious, a little bit more cynical. And again, we have the overlap of the negatives flinging around in America during the election process. Usually markets go up in election times. This time I don't think it will because of the prevailing negativity that's going on. So I think it's going to be a flattened period of time. There might be some nice surprises, but I think sort of a plateau for a little bit till we get through the election process and see who the winner is going to be and go from there.
Thank you so much, Tom.
Thank you.
And thank you all for watching. Bye for now.